Well, let's give you the markets update now. The rand is under pressure this morning as investors digest the hot U.S. inflation, with the JSE looking set to contend with a significant global market duress. Matete Thulare is head of foreign exchange execution at Rand Merchant Bank, and he joins us now to talk us through some of the market developments. Top of the morning to you, sir. Let's start with the rand, which touched the 16 rand against the dollar mark. Help us make sense of the sentiments that are influencing trade there.
Good morning, Dolly. I suppose they don't call it the rand, the rattlesnake for nothing. Friday's US inflation number came out, and, the fallout continues into the morning session as we start off the week. And I suppose as we're trading above 16, we're just trying to find a level at which we can stabilize at. Already May's 8.6 inflation number from the US is much higher than the expectations that we had on Friday, and it's also beating the 8.5% number that we saw out in March from the US. So it's very clear that the US has a very serious inflation problem, and it looks like the Fed may have to force a recession at where we are. Already markets are pricing in a 50 basis point hike this week, and already for next month, it looks like expectations are for another 75 basis points hike next month. But already, there's already talk about a potential 70% chance that the US could enter into a recession come next year. So that has a huge fallout in the equity market, where we've seen equities down 4% out in the US, and we've already seen the dollar much stronger given its status as a safe haven currency. There's also been renewed COVID testing out in China, which is also adding to the uncertainty. And then when you bring it back locally, there's starting to be pressure from a political front, obviously with all the issues regarding Farmgate and Mr. Ramaphosa. And then you've seen the rand just, capitulate and about 16 this morning. So all jittery and jumpy trade continuing to the morning session this morning. The key for us is to hold below the 1635, which is 2022's highs. But that doesn't look at risk at this point in time. But, the rand has been hit more than a lot of the other emerging market currencies over the past week. So unfortunately, we have undid a lot of the early week outperformance that we saw last week. But you know what? It's not all doom and gloom, given the fact that there is still a lot of headway into the rest of the year.
Yeah, let's focus the attention on commodities for a moment. Gold prices slipping from a one-month high, while oil falls amid a surge in COVID-19 cases. What's driving market sentiment there?
So look, gold prices have eased from the one-month highs that they saw earlier last month. I suppose also the red hot US inflation number that you are talking about has lifted US Treasury yields, and that also has tempered the appeal of gold as a safe haven. So gold is obviously seen as an inflation hedge, but the opportunity cost of holding it is much higher, especially when the Fed is at a point where they're raising short-term interest rates as gold yields no interest. Now, when you also look at the other side of the spectrum, which is which is oil, now that has traded lower as the Fed tightening expectations are hitting fresh highs, which is obviously driving the recession fears that everybody is looking out for. And that's also forming another cloud, because already with this coronavirus reopening horizon out in China, you're seeing a stronger dollar, and also now the inflation fears are proving to come to the market. So the approach also of the US driving season is keeping the focus on tight global oil supply and product markets. And we're seeing Brent still near the $120 market barrel. So that's despite the concerns about China and the recession. And it just shows you that the oil prices indeed work in a vacuum relative to other risk assets.
Yeah. Let's talk about the Qatar Energy, which signed a deal with Total Energies for a $30 billion liquefied natural gas project. Talk us through some of the specifics of this deal.
So that's quite an interesting one because Qatar obviously signed this deal with Qatar Energy yesterday. And this is out in the Northfield East expansion, which is the largest energy project. And I think there's more partners that will be announced in the coming days. But already the Gulf Estate is said to be partnering with international energy companies in the first and the largest phase of the nearly $30 billion expansion. No company will have a higher stake than Total Energies. Total will have a stake of around 25% of one train in the whole project. But we're expecting companies like ExxonMobil, Shell, they will also participate in the Northfield expansion. And once the investments are completed, Asian buyers are expected to make up half of the market for the project, and then the rest of the buyers will be coming out from Europe. Now, the project will obviously boost Qatar's position as the world's top LNG exporter and obviously help them guarantee long-term supply of gas into Europe as the continent obviously seeks alternatives from the Russian flows that we've obviously been seen cut off given the geopolitical tension out in Eastern Europe.
Yeah. The strike at Sibanye Still Waters, the gold operations, it's finally over. And I can't believe that I'm actually talking about it finally being over. But now the difficult work of dealing with the loss of production, the months that this strike has gone on for. And I suppose one of the other key questions here, Matete, is whether or not the company can recoup the losses.
So look, operations at Sibanye Stillwater, they're expected to resume, obviously following the sign-off of this 3-year wage agreement with the unions. I mean, the agreement was signed on Saturday, apparently in the early hours of the morning, which obviously ended a 3-month-long strike between NUM and AMCU, which started in March. But now, as a result of the no work, no pay principle, striking employees have lost more than 1 billion rand in wages since the strike began. So that obviously alludes to how much money has been lost by the employees, totally. But also an in-deal principle, which was announced more than a week ago, but was only signed in the early hours of Saturday morning. It seems that the talks had failed and they would have had to resume this week. But it looks like NUM, AMCU, and also Sibanye managed to reach a deal. But now also on Friday, Sibanye came out to say that the wage agreement would not only be about wages, but also about transport bonuses and also maternity leave, which obviously feeds into the goodwill and how employees are being treated. But also to cushion the impact of the strike, apparently the company has agreed to pay off a once-off hardship allowance of 3,000 rand, of which 1,200 rand would be paid in cash, and then the difference allocated to the reduction of debt and loans that are owing to the company. So it looks like there's still a bit of headway to go. But also, if you just look at also the mining production numbers that came out last month, we did see a big drop there, and some of that could be attributable to what has happened out at Sibanye, given the fact that there hasn't been any production for the past couple of months.
Sure. Let's wrap it up with key events that we ought to look forward to in the week ahead, and I suspect you may have in mind the retail sales, which might grab the spotlight.
Yeah, so besides the retail spotlights, I mean, I think also, Tony, what's going to be really significant this week is the fact that the Fed policy decision will take center stage. Above everything else, I think the whole world will be looking at to what the Fed is obviously going to do. It's all but certain that they will hike by 50 basis points. This is on Wednesday evening, but the market will actually be very careful to watch for signs of how fast and how far they will hike rates going forward. And also the press conference, which is 8:30 South African time in the evening on Wednesday, will also be really important going forward. But also, there's also Chinese data set numbers that are coming out for the month of May. How quickly China recovers from COVID lockdowns is the major question for markets, and these data prints will still cover the lockdown period, and so it's going to be quite interesting. And also, out in the Eurozone, there's going to be an amazing 17 speeches by ECB policymakers this week, mostly concentrated on Wednesday and Thursday. So this will provide us clarity onto the policy decisions that they made last week, where we saw an interest rate hike out in the Eurozone, and particularly how aligned policymakers are going to be in terms of their thinking for the last 6 months of the year.
Matete Thulare, thank you very much for that markets update. Very comprehensive one indeed. Head of Foreign Exchange Execution at Rand Merchant Bank.